Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hello, thanks for joining us. I'm Kevin Ortner with Renters Warehouse, and I'll be your host today for REI Classroom. And we're going to talk about rent estate and how to crunch numbers like a nerd.
This REI Classroom real estate lesson is sponsored by VirtualStaffNow.com.
When you're looking at and measuring your investment real estate, you want to know how that investment's doing for you. If you're looking to buy a new piece of real estate as an investment, how is that going to perform in your portfolio? And is it better than what you have, or can you find something better? So we're going to go over 3 simple ways to measure your real estate. The first being cash flow, the second being cash on cash return, and the third being cap rate. Now the first one's cash flow. This is the most common way that early investors look at their properties and decide, is this a good investment or is it not a good investment? And cash flow is simple. It's simply your monthly rental income or income on the property minus your monthly expenses. This obviously equals your cash flow. But in my opinion, it's a little bit too basic of a way to evaluate your rental real estate and leaves out several variable factors or really valuable things that you can really take into consideration. So let's jump into the second one, which is your cash on cash return. And cash on cash return is a little bit of a better take on the cash flow equation. And the reason why is it actually takes into consideration how much money you have invested in your investment or invested into your real estate. And so to start with your cash on cash return, you need to take that cash flow number that you determined before, which in the previous example, we had a monthly cash flow number. We need to turn that into an annual cash flow number. So we'll multiply that by 12. And let's just say that our annual cash flow on a property is $2,000 for the sake of this example. And let's say we bought a $100,000 property. We put 20% down, or $20,000. The cash on cash formula is really your annual cash flow divided by the cash invested in the property, and that's going to be your cash on cash return. So in our example of a $100,000 home with a $20,000 down payment, $2,000 annual cash flow divided by that $20,000 down payment is a 10% cash on cash return. Now, what does this mean? It means that you have you're making 10% on your money. You may have bought a $100,000 investment or a $100,000 piece of real estate investment property, but you've only put $20,000 of your own money into it. And so each year you're making 10% on your money, which is a fantastic return. You certainly can't find that at the bank or in your 401k usually, or things like that. And so that's one important way as to how to look at this is, what am I making on my cash invested in a property? And that's the unique thing with investment real estate. It's one of the few asset classes that ordinary Americans like you and me can buy and actually use banks' money to do. We couldn't walk into a bank today and say, I'd like to borrow money to buy Apple stock. That's just not going to happen. But you can walk in and say, I would like to borrow money to buy an investment. It just happens to be real estate. And then you can leverage other people's money to make your money go further. So the cash on cash return is an important way that you can look at your return. And again, find out how much money you're making on your money invested in your real estate. And the third item we want to talk about as far as how to measure things is cap rate, or the capitalization rate. And a cap rate is simply the ratio between your net operating income or your yearly cash flow and the purchase price or value of your property. This doesn't come into play much on single family homes or small multifamily, but oftentimes this is how, or all the time, this is how large apartment buildings and multifamily buildings are valued. But let's use the same examples we were using to keep the numbers consistent and say we bought a $100,000 property with a $2,000 annual cash flow or net operating income. And the formula for capitalization rate is your net operating income divided by your cost or value of the property. A little bit different than that cash on cash return, as this takes into consideration the entire value of the asset. So in our case, we'd have $2,000 of annual cash flow divided by a $100,000 purchase price or value of the property. And that's going to get you 2%. So a 2% cap rate. Now that's a really low cap rate, but again, we were using a single family home or a low value property for this. And as a rule of thumb, most investors want to invest in and buy properties that are between a 5 and 8 cap rate, depending on how aggressive you want to be and what your plans are for the property. Again, that's capitalization rate. And important really as you move into larger multifamily buildings is going to be the best way to weigh your investment. So whether you're just getting started investing in long-term real estate or you have had properties for a long time, make sure on a regular basis you're doing these formulas to find out what's my cash flow, what's my cash on cash return, and if you have larger properties, what's the capitalization rate, and compare that to other real estate investments you have, or certainly what you're doing with your other cash on hand, whether it's in a bank or 401ks or your other things, and be sure not to put all your money in one basket. But this is a great way to diversify and make sure that you're getting the best returns on your investment. So again, we talked about cash flow, cash on cash return, and capitalization rate, and great ways to analyze your properties and your investments and find out if they're really working for you. And that's all we have for you today. Looking forward to seeing you next time on REI Classroom.
VirtualStaffNow.com is the leading virtual assistant provider for real estate investors. As busy real estate investors, there's nothing more valuable than our time. And VirtualStaffNow.com not only helps you find the right real estate virtual assistant for your business, they train them on an ongoing basis, manage them daily to make sure they're staying productive and effective. And in the event they're not the right fit or need to be replaced, they handle that for you too. Whether you need 1 or 100 virtual assistants for your team, start the process right now at VirtualStaffNow.com. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of FlipNerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at FlipNerd.com. Please check out the FlipNerd family of real estate investing shows, where we host 4 great ongoing shows at FlipNerd.com/shows, or simply search for FlipNerd in the iTunes Store.